Hi everyone, Namaskar, Sat Sri Akal or Pranam. A warm welcome to my YouTube channel. So today's topic of discussion would be corporate banking. So what is corporate banking? Or should we say what is banking? Or let's try and understand what a bank really is before understanding what banking is or what entails corporate banking. So, what actually is a bank? Let's understand that first. Let's take an example. Let's say there's a trader, and this trader doesn't manufacture any goods or doesn't provide any service. All he does is he procures goods from the manufacturer and sells it to the end consumer. So today, if you ask me who are such traders, you have very big name: Amazon, Flipkart, you have DMart, and the list continues. So what does a trader typically do? Wait. You can ask me, you started with a bank and then you're giving me an example of a trader. What is it? Folks, hang on. Hold on to all your horses. Let's tell you what a trader is, what does it do, and then I'll compare what a bank does, which is similar to the trader. It will help us understand and cement the concepts better. So, a trader purchases goods from the manufacturer and sells it to the end customer. It could be an Amazon, it could be a Flipkart, it could be a DMart, it could be a big basket, and the list continues. So what does he typically do? He purchases goods, say, for rupees X, and he sells the same good to the end customer at rupees Y. So what does he do? He adds his margin, let's say X plus delta X, or let's say X plus P. So P is his margin, right? So his sales price is Y, his cost price is X, he adds his margin P to it. So now what actually a trader does is he procures goods from the manufacturer and adds his margin and sells those goods to the end customer. Hope things are clear till now. Now what typically a bank does? Let's try and understand. As you all know, people like you and me who are citizens of India or citizens of any other country, they have cash with them, right? So what does the bank do? The bank doesn't print any money. Okay, they are just custodians of public money. So what does it do? The bank says, hey guys, hey folks, you bring your money and give it to me. What I will do in turn will make your money earn an interest. Say for example, the bank says it will pay 6% interest on the money deposited with the bank. What does the bank in turn do? The bank lends same money with some margin to individual customers like you and me and calls it loan. So the bank gets deposits from one end and lends loan to individuals at the other end of the transaction. So what does it do? So the cost for the bank is 6%. It adds its margin, say 3%, and gives the loan at say 9%. So 6% is the cost of the money, 3% is its margin, then 9% is the sales price that it is lending to. So now if you see the example that we quoted earlier of a trader makes clear sense. Now you understood why the trader example was taken to explain a bank. So let me repeat. What does the bank do? The bank takes money from individuals as deposits for some cost, say 6%, and lends it to individuals as loans at 9%. The differential between 9 and 6% is the margin that it makes on the entire business. Okay? So guys, you could ask me, what are these two photos doing in the slide? So whenever the word bank is uttered, what comes to our mind? It is typically this picture over here. What is this picture? This picture typically states that any bank would have counters like this and people sitting across the counters who are bank employees who are servicing individual customers like you and me. So there are walk-ins happening into the bank. Obviously this photo should have been taken during the corona period, and that's why there is a social distancing being maintained. That's a different topic. So there are various counters, the walk-in happened. Maybe this individual has come here for depositing cash into the bank and getting a receipt against it, or the person here would have come to withdraw cash from the bank instead of from the ATM. Obviously these days the walk-ins have reduced because of increase in UPI transaction, which is Uniform Payment Interface, which probably I could cover in the future topics that I would be taking. So now we have seen that bank caters to individuals, okay, at one end, and also at the other end it caters to individuals by lending loans. So the bank is catering to the retail customers, okay? Please highlight the word retail customers, and hence it's called retail banking. So all the branches that you see of any bank like PSU Bank, SBI, it could be PNB, it could be Indian Bank, it could be Canara Bank, वगैरह वगैरह वगैरह, okay, or it could be private sector banks like HDFC Bank, ICICI Bank, IndusInd Bank, Kotak Bank, RBL, Yes Bank, etc, etc, etc. So all the branches that you see out there are retail banking branches. Now similarly, whatever transaction that I explained that happens with individuals and a bank, if in this entire setup, if the bank gives service or does similar kind of a transaction with a corporate house, say for example Reliance, say for example L&T, then it's called corporate banking. So the bank takes FD, fixed deposit, from the corporates on the one end of the transaction and lends to the same corporates or to different set of corporates as loans on the other end of the transaction. Then this particular type of banking is called corporate banking. So folks, This is in its simplest terms that I have given you a parallel to retail banking and a corporate banking. This is in layman's term. Alright, so guys, now we are having a fundamental idea of what is a bank, what is retail banking, and what entails corporate banking. Just a fundamental idea, please mark my words, a fundamental idea. Now we would know why do we require a bank in the first place. If we go back in the history of humanity or travel back into the history of time, certain centuries earlier, the medium of exchange for any trade was goods, and the system was called barter system. Now, say for example, there was a person named A who wanted tomatoes, and there was a person by name B who wanted lentils. So, a person A would approach person B for tomatoes, and person B would agree to trade those tomatoes with person A in exchange of lentil. But please note that there was no standardization in barter system, which means whether a person A has to pay one crucible of lentils in order to get 10 tomatoes, or person B has to exchange 12 tomatoes for 2 crucibles of lentils. So this was not standardized, and hence if the traders, who in this case is A and B, are having meeting of minds stating they both see a value for each of their commodities that are being exchanged, then there was a possibility of a trade, and this was the beginning of means of exchange of goods. Now what happened later on? As the civilization progressed, people understood that the disadvantages of barter system has to be overcome, and that is when coins were introduced. So with the progress of the civilization, mankind found that there was a technology by virtue of which ore can be extracted from the earth and metals can be extracted from ore, and from metals coins can be minted, and these coins then became the medium of exchange for any transaction. Thus now, instead of just two goods which were getting traded in the barter system, there was one more commodity which became coin, and coin served the purpose of having standardization of value proposition in any trade. And with the advent of banking system, which was pioneered by the Rothschild family in mid 17th century in UK and the Europe, paper money was introduced instead of metal coins, and the metal coins that were used in the earlier period were of either bronze or copper or silver or gold. So that was replaced with the paper money, which is also called fiat currency. And we know the story, how it progressed. We have electronic money in the form of Visa, credit card, smart rupee cards, and these days cryptocurrencies in the name of bitcoins, Ethereum, etc., etc., etc. So now we understood how the trade used to take place in the history of time and history of mankind, and how has it progressed over the years till the modern time. So guys, what do you think? Who controls all these paper currency or the electronic digital currency in the world or in any country? So there is a central bank for each of the countries which regulate the banking system in each of their countries. So for India, it is Reserve Bank of India, and in the US, it is called the Federal Reserve, known by the name Fed, by a short name which is called Fed. So the central bank of India is Reserve Bank of India. So let us see what are the functions of Reserve Bank of India. If you can see, the Reserve Bank of India issues banknotes. It's a banker to the government. It's a custodian of foreign exchange. It's a lender of the last resort to the banks, or you can also call Reserve Bank to be the banker of the banks. And one last item which is excluded here, that is, it regulates the banking system in India. So guys, this was a fundamental session on banking, banks, retail banking, and corporate banking. I thank you all for your patient listening, and do subscribe to my channel if you really feel that there was a value addition in terms of the fundamental session that was conducted today, and do hit the bell icon for instant delivery of my videos. Thank you for tuning in. Stay healthy, stay safe, and enjoy.